Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day straight and also get you the market strategies from top market expert who will be joining in on the program with us. Quickly, let's look at how the markets are going to be closing in today. Last half an hour of trade and you see some green come in on the Nifty. You can see at 25,492 level at this point in time. We are slowly and gradually after a whole host of choppiness and the same narrow band of trade that continues for the third, fourth session in a row. Now we're seeing some pickup take place. What's really leading to this momentum is, of course, the banks that have been holding up well since morning, especially the private sector banks, the financial services. Now even IT and real estate pack have started to pick up some pace. So some of those stocks are also participating in this gradual up move in the trade. Kotak Mahindra Bank remains the top mover. Eternal follows. You also have NTPC that's up about 1.5%. Asian Paints, Grasim, BEL, Adani Ports, Ultratech Cement. So cement basket, paint basket, those are the pockets that are up. Even power names, Eternal, you can see the food delivery giant that's up and about. What's down? Titan, 6% lower after that Q1 update. Pharma names like Cipla, Dr. Reddy's are also lower. Trent continues to stay weak after the Q1 updates. You also have Bajaj Auto that's also slipping in the trade right now. Let's welcome our guest on board. Mr. Gaurav Sharma joins in. He's the Associate Vice President and Head of Research at Globe Capital, and he joins in with his fresh take on the markets. Warm welcome to you, Gaurav, and thank you so much for taking the time out. Well, we have been seeing extreme amount of consolidation take place over the last couple of sessions, lackluster trades, extreme sideways momentum, narrow band of momentum, which feels like directionless at this point in time. What would you attribute this slow trade to?
Good afternoon, Sakshi, and good afternoon to all the viewers. Thanks for having me on the show today. So it's been days also now that the Nifty index has failed to take a decisive stance. Today too, it is trading on a very dismal note, completely flattish day in trade so far. Nothing meaningful has happened. If you look at the past couple of days movement, Nifty is completely trading in just about a 300 points range. That is just over a 1% move, which is negligible. So overall, it goes to show that the index is waiting for a decisive move here. Bank Nifty is also trading somewhat in line with the benchmark, although the move is a little bit better when compared to Bank Nifty, when compared to Nifty, just because of the nature. Bank Nifty is generally of a little more volatile nature when compared with Nifty index and is indicating towards upward movement. Therefore, this gives us some signals that we could see a breakout coming in the near term, maybe by tomorrow or the day after, on the higher side, and Nifty would scale up to 25,800 levels.
Okay, got that. One of the key triggers for this extreme amount of volatility has also been, SEBI's finding that large hedge fund like Jane Street has manipulated the market in such a manner that has also led to unfair gains of over 4,800 crore rupees that have been impounded on the one hand by SEBI. They've also been banned from accessing the securities market. But at the same time, SEBI has highlighted that how in the F&O space, 90% of traders continue to lose a lot of money. 1 lakh crore rupees is something that as a figure SEBI has highlighted already. This has raised a lot of questions around, what should traders be knowing when they actually are stepping into this game of derivatives as well as F&O at this point in time. Can one, safely assume that there is a level playing field, or are there going to be question marks that needs to be addressed first, and only then should small retail investors be really playing with their hard-earned money or leverage money, which is another key concern that emerges for a lot of retail investors in the F&O space. How are you reading into what's really happening in this space? On the one hand, we do know SEBI is consistently talking about protecting the retail investors. They're doing their own bit. But on the other, what is it that an average retail investor must know?
So actually, there are two ways of looking at it. Firstly, just prima facie what the news came in of such a big thing, such manipulation being done by a high frequency US player. And then, the quantum of the trades also, ignites the issue to a large extent. What I see is the positive side of it, that the regulator caught hold of it imposed a fine at it and banned it from trading into the Indian markets. So that is a positive side as well, that we have a good regulator in place there. They are doing their job well. They are catching hold of the mischief which are happening in the capital markets, and this is how I take it. My perspective is on the better side of it. Now, when we talk about investors or traders, yes, it is very important when someone is trading into the futures and option market. A better informed trader should do it. One should understand that it is a volatile market, and steep moves are witnessed every now and then. So even it should be used for the right purpose, not for speculation. Derivative market should be used for hedging purpose. First thing that investor should understand. If you are looking at long-term investment, you should go by the route of cash market, taking delivery and holding on to your position rather than taking smaller lots in futures.
Got that. Let's now try and understand, as an impact of what's transpired between SEBI and Jane Street over the last couple of sessions, a direct impact has been seen on the capital markets related stocks, exchange related stocks, BSE, brokers like Angel One, Nuvama. They have seen, a clear brunt of that. Meanwhile, viewers don't lose the sight of the Nifty. You are seeing a spike and a lot of pickup that's taking place. A large part of it is still coming in from the private banks in terms of the weightage. We'll come to that shortly. But, between Jane Street and SEBI, what we've seen is that the capital markets related stocks are feeling the heat because of the absence of a large hedge fund, which used to probably contribute 50% of, some such funds, like they almost contribute 50% of the overall trading volumes in F&O. And when such a large hedge fund is absent, it clearly hits, the volumes of the exchanges and the brokerage houses where the deal was, trades were carrying out from. What is your fresh stance on this space?
Firstly, whatever profit taking that we are witnessing on the stock market related players, the largest being Bombay Stock Exchange, it is down over 6% in trade today. A day before yesterday, also a good amount of profit taking was witnessed. What I see is this is just an intermediate move and a healthy correction that most of the investors were looking at. Yes, going forward, this will have an impact and a toll on its earnings, but this is equally a good thing that a violator has been booked here. So whatever profit taking comes in, currently quoting around 2474 levels, I see the stock heading towards 2300 levels, maybe in the next 1 or 2 days. And even if the decline extends, it will further heads toward 2100 odd marks. So this should be considered as a healthy profit taking, considering the kind of up move we have seen of late in the share prices of Bombay Stock Exchange. The very recent move started from 1200 odd levels, and it rested somewhere around 3000 odd mark. The stock more than doubled in this particular up move. So when the stock now is exhibiting profit taking, I think this is a pretty reasonable move. That is how I take it.
Okay. Fair point. Now let's delve a little deeper into finding out what's happening in the markets. Back above 25,520, sudden spike of momentum that's come in. Of course, Kotak Mahindra Bank was the one that continued to stay its course on the higher side on the Nifty. It's ICICI Bank and HDFC which are also contributing now to the gains. On the top contributing side within the Nifty, you'll see Kotak, HDFC, ICICI, Infosys as the top 3 or 4 names that are contributing in that order, along with Eternal NTPC. But yes, a large part of it is from the private sector banks. Fresh wave of momentum here. Would you be looking at it seriously at this point, Gaurav?
That's what exactly I was mentioning in the earlier part of my commentary, that Bank Nifty is showing signs of recovery and that will eventually pull the index higher, and what we are currently witnessing. Private banks are playing their part. The only thing is that this move is coming in the last half an hour of trade. So average out of the gains and the numbers will be seen post market. But having said that, this is a good move. When the private banks start moving, they actually have a larger and a deeper impact on the broader markets.
Okay, fair point. So that's the private sector bank. And what would you say vis-a-vis to the PSU banks that had started to gain some traction over the last couple of weeks? How are they placed?
PSU banks are very well placed. State Bank of India and Canara Bank are our favorite picks among the lot. And any decline in the PSU banking space should be considered as a good buying opportunity, keeping at least 2 quarters, 6 months, five of investment horizon.
Okay, fair point. What about NBFCs at large? Are you still looking at players like Bajaj Twins? Are you looking at other names within this basket? What's happening here? Even this space is showing us some traction now, 0.6, 0.7% higher days high move.
NBFCs are also likely to perform in the coming months. The kind of business subject Bajaj Finance has given, it has actually paved way for a good quarter for the NBFCs and times good times ahead as well. So I remain positive on the NBFC space. May it be the Bajaj Finance space or the housing finance space.
Okay. Housing finance names are also looking interesting at this point in time, viewers. That's what Gaurav believes. Another key trigger, two more triggers that are coming in, Gaurav. One is the tariff deadline that we are all awaiting to see tomorrow. And so far, no deal has been signed with India yet. Within the 14 countries that have been sent letters where fresh tariffs will be applied, also India does not have a mention there, which means and gives us some more hope than from the statements coming in from Donald Trump that we are very close to cracking a deal with the US when it comes to the tariffs as far as reciprocal tariffs are concerned. Let's understand from you what is it that you are waiting to hear, and what is it that the market should be looking to see as well on tariffs.
Frankly speaking, I don't see a very large chunk of tariffs being imposed on countries like India and China that are the leading emerging economies. China being the largest factory for the entire world, and India also gaining a reasonable percentage in terms of manufacturing. When we look at our sectors which are getting driving their most of the business from US, it is pharma and IT. The kind of earnings and projections IT has already shown in the past 6 months clearly goes to show they are in strong hands. Pharma is also holding on ground very firmly. When we talk about companies like Divis Lab, which is the largest, API player, and it exports a huge chunk of its market from to America. I think it will be really difficult for US to impose any kind of tariffs on the pharma side that will eventually lead to the pharmacy market being expensive in their homeland.
Okay, fair point. Now, Gaurav wanted to also understand today, since morning, we are seeing a lot of buzz even on the textile space back home. That's also looking to explore some kind of a competitive edge vis-a-vis other nations like a Bangladesh or a Vietnam, which have been imposed higher tariffs. Now, we are at a 10% baseline tariff. Vietnam got a mini deal with a 20% tariff, and Bangladesh has been imposed 35% tariffs. Nobody knows whether this is negotiatory, whether there could be further changes, and what comes in next for India also. But at this point in time, as the reaction stands, most of these stocks are up about 14-15% as well in trade today. Do you find any opportunities that one should be looking to explore within the textile space on the back of this momentum?
See, Urban Textiles is one stock which I find very much in a good spot. It is a well managed company, uh, a large player, and a huge exporter as well. But of late it has not been able to perform. When we look at the Bangladesh textile industry, it is undergoing a very stressed phase. A lot of business that used to go to Bangladesh is now being shifted to the Indian players. So I think this will be an added advantage for the Indian textile players and will increase the momentum. So positivity would be there, and Arvind should be a gainer out of this particular move coming in.
Okay, got that. So that's the textile space for you viewers that also could be on your focus list. Today, realty has again seen some smart momentum. Today, I think it's the top moving sectoral index with about a point, almost a 1% surge that's coming in. Are realty stocks really getting back into a favorable zone? Would you be looking at them as a structural move to play the structural story at this point?
Firstly, yes, a Nifty Realty is reversing from a very fine level, and today's move is backed by just over a 1% up move in DLF, which is also moving in tandem with the market, or would say that it is actually contributing reasonably towards the realty's rise. Apart from this, Sobha Developers is also one stock which is at a very sweet spot, available near the confluence zone of its short as well as long-term averages. So this also stock can be considered from a medium-term trading horizon, keeping a stop at 1400, looking for targets close to 1700, 750 zones.
Okay, got that. So that's the real estate story playing up well for you. Let me focus a little bit on the PSU stocks. This index is also up nearly a percent, 0.8% higher now. What's buzzing here is the power space, NHPC, Power Finance, NTPC, REC, Power Grid. These are the stocks that are actually coming back. Gaurav, I remember last time also we had been focusing on this theme that's again starting to play. In 2024, for a brief period, power stocks were something that all retail investors were definitely focusing on, thinking at least one stock from this space should be a part of their core portfolio. There were moves on Coal India, there were moves across NTPC, Power Grid, Power Finance Corporation, renewable energy names as well. How are you looking at the power story develop now?
When we look at power story, may it be distribution stock, transmission, or the grid companies, or maybe the renewable companies, which is the the green energy stuff, the solar energy, the wind energy space. So one should consider it at a very long term perspective, at least 2 to 3 years. One should not be looking at a considering it at a short term perspective. They have a role to play. This particular industry is experiencing a turnaround, a changeover. So this will take time, and eventually it will be for the better side. So look at it from at least a 2 to 3 years perspective. Stocks like Power Grid, NTPC, REC, Power Finance Corporation, and some of the private sector names as well, Suzlon, Tata Power. They all are very well placed, and they have a good room of up move.
Okay. That's the power space for you viewers that you can look at. Let me just come to the consumer durable names and the overall consumption story now. We'll start off with Titan. The Q1 business update came in, and after that, we have seen a sharp drop on the stock today. The stock is down by over 6% in trade. There were many reports that analyzed, Rekha Jhunjhunwala and the family's stake in Titan. Remember, Titan used to be always discussed as late Mr. Rakesh Jhunjhunwala's top holding and a stock that he would always talk about. Brokerage houses are still talking about a bullish trend. They are also giving CLSA has given a much higher target, but at the same time, the slowdown in the sales and the rising gold prices that have impacted the sales is something that's been a dampener. How would you look at Titan, Mr. Sharma, and what's your fresh call here?
I find Titan to be a very attractive bet. The numbers came in real well. It is a 20% year-on-year growth in the consumer business. The overall segments, when we look at, it has added 10 new outlets. Titan is a stock. If I'm getting it correctly, 75%, 70-75% of his business is coming from the jewelry segment. This is also expanded, and it saw a 18% rise in the domestic sales. Yes, the exuberant rise in gold prices have an impact on the demand of gold, but jewelry as a segment that cannot be laid off for a much longer time. Going ahead, the festive season is approaching, and I think the coming 2 quarters would fill the entire gap. So this dip should be considered as a buying opportunity. I find Titan to be at a very sweet spot. It is doing well, it is expanding well, and it has a good pedigree, the Titan Group, and the largest jewelry stock in India.
And what's your thought process on the overall gems and jewelry space? Do you also have a coverage or an understanding of the other stocks, maybe a new one like a PN Cargill or Kalyan or PC Jewelers? We've been seeing a momentum across the board in the last few days. Are you looking at the entire basket? Senco Gold is one. How would you look at the entire basket of stocks within this space?
When we talk about the jewelry sales, we are as of now covering only Titan. We are not looking at the other areas. We find this stock to be a wholesome kitty of the entire gems and jewelry space.
Okay. What about the gold financiers? We haven't discussed that for a long time. Muthoot and Manappuram Finance, we discussed the overall NBFC space, but gold financiers, how are you looking at them?
Again, riding gold prices is a clear cut advantage to these companies. They their the mortgages that they are having, they get into a sweet spot. They have a larger chunk of the holding. The business also increases because now they can put out more loans against per 10 gram of gold. So the rising gold prices is a clear positive for these companies.
Okay, fair point. So that's the financiers for you at this point in time that one can definitely be looking at too. Let me also ask you, it's 3:22. Any trades that one can take as a BTST or STBT today? With this sudden spike coming in towards the end of the session, does anything change for you?
Past couple of sessions, I am looking at Asian Paints. This stock has started moving and gaining momentum from the bottom, and this is looking pretty attractive now. So, especially from a trading perspective, one can take a buy position here. I won't say a PTST position, maybe something like a week or 2 weeks kind of a position. It is currently trading at 2485. One can take a long position here, keeping a stop close to 2340 odd levels, and eyeing a target close to 27 2750.
Okay, got that. Keeping an eye out on that as well. Let me just pull up a few stocks, viewers, for all of you to really see from the broad set of the markets where the momentum is coming in from. Well, you do have a lot of momentum on a lot of stocks like SML Isuzu is up by 5.5%, 2846. You have Ventive Hospitality, one of the recently listed ones, 6% higher. You have Lemon Tree Hotels, Raymond Lifestyle, that's up in trade today. Car Trade Technologies is up by 7%. Smart moves coming in. Belrai is a recently listed IPO also coming up. Alok is up. Allen Barry Industries Gas is also another recently listed stock is up. Parswanath from the space of real estate is also up. Sambhav Steel Tubes, another one from the IPO space, recently is up. A lot of these recently listed stocks are moving up. Ventive is up in trade. We've marked out for all of you Belrise, all of these stocks that are holding up, Sambhav Steel. Anything from the recently listed stocks that you are tracking probably after the IPO got launched?
Not exactly. At a time when the broader markets are sticking around, we are also sticking around with the better ones, so as to being it on a more stable and a concrete spot. We don't want to be caught on the wrong foot, especially when we are expecting volatility in the near term. The trade related news can come in any day, overnight, and we could see a erratic move in the opening move itself.
Okay, we'll keep an eye out on these moves also and just keep highlighting for all our viewers what's happening here. All right, Gaurav, if I have to ask you from the overall Q1 earnings, are you betting big on any key sectors that would be outperformers this time?
I'll be keenly looking at the numbers from the PSU banking space and hotel stocks along with the FMCG space. We have started, keeping a view on very closely tracking some of the FMCG stocks, and we expect them to outperform broader markets. Hindustan Unilever and Godrej Consumer are the two stocks that we are expecting to outperform in the coming quarters.
Okay, fair point. That's the view that's coming in then. You did say hotel stocks, and I wanted to discuss with you one name that I recently took that, Ventive Hospitality, that's up in trade today. One of the other recently listed stocks is Schloss Bangalore, the operator of Leela. Today, there are so many brokerage houses that have initiated their coverage. First buy ratings coming in for Leela Hotel after getting listed. The stock is also up by 5%. I wanted to get your order of preference in these stocks as to how do you go about. In the initial phase, it was used to be IHCL, Lemon Tree. A lot of these stocks were used to be the favorites of analysts. Have you added a few more stocks within this basket? What about the recently listed ones?
As of now, no, we have not added any of those. We still find reasonable comfort with Indian hotels and EIH hotels, and thereafter Lemon Tree.
Okay, fair point. I hope this has also helped you out in understanding the way we should be really looking at all of these stocks. Okay, let me ask you also on Eternal. What's your fresh take? 263 is back on the stock, 2% higher for this one. What's in the offing for Zomato parent company?
It is looking good. It is consolidating from over 10 days now in a very narrow range. I see a breakout coming in soon. The breakout level would be just above 285, 265. Once that level is taken out, this stock has a good room left to scale up to 285, 300 odd levels. So it is in a sweet spot, good trading stock here. So stop loss level is also placed close by. One can take a stop at 245 and buy a position once the stock go passes to 65 to 68 zone.
Okay, got that. I hope this has also helped our viewers out in understanding how to go about this stock. Anything else in the new age tech basket that's come up afresh? Have you looked at maybe a Nykaa or a Delivery also in the recent momentum that's generated? Are these looking attractive too?
Little
Gaurav?
volatile as such. The Nykaa, it is a very kind of a volatile steer, not among the stocks that are of my preferred list. I'll simply look at it from a trading perspective, and then to once the stock closes above 210 levels, then only I'll be considering the stock and taking a trade for 225 or 240 levels, but not now.
Not now. Okay, Gaurav, we'll leave you at that. Thank you so much for sharing all those thoughts with us across the board. And the good part is that we are ending near the high point of the day, 25,523. Let's hope that, tomorrow this buying continues to sustain. I think there is some buzz around how the trade deal with India could be coming in tonight. And that also could be one reason why the markets have seen some buying emerge towards the end of the session as well at 25,524. No confirmed news. There are some media reports that are flooding that tonight is when India could sign a mini deal with the US, and that could be announced tonight, and that is one reason why you could see that spike come in towards the end of the session today after a complete lackluster day of trade. 25,523, 61 points higher is how you see the markets towards the end pan out at. Let me highlight for you the key sectors. Real estate up by nearly a percent. Financial services up by 0.6%, private banks up by 0.6%, Nifty Bank half odd percent higher, outperforming the benchmark. Even the IT stocks are up by about 0.3%, oil and gas also slightly higher. Broader markets underperform the frontline indices. Mid and small caps both slip into the red today, down by about 0.1% each. PSU banks, the outliers and non-performers within the entire Nifty Bank performance. Autos, pharma, consumer durables also decline, largely led by Titan, that has been the top loser on the F&O space as well as in the cash market. Kotak Mahindra Bank was the top winner. Eternal followed. Asian Paints, NTPC, Grasim, BEL were the top movers, whereas Titan was a big laggard. Dr. Reddy's, Bajaj Auto, Cipla, Trent. Top 5 laggards on the Nifty today. Within the PSUs, NHPC, Power Finance Corporation, NTPC, BPCL, BEL, HPCL, REC, these are all the names that flooded, with gains in the closing edition today. Top movers within the broadest index, Sambhav Steel Tubes about 14.9% higher. You had Ellen Barry Industrial Gases 10% higher. Alok Industries 9% up. Belrise Industrial 9% higher. Parswanath 9% up. Ramki Infra about 8% higher. Gabriel India about 8% higher. BF Utilities was up in trade, Dornier Industries was up, Car Trade Technologies, Prostam Info Systems about 6.5% higher, VST Tillers, Tractors, Hariom Pipes, Schloss Bangalore about 5-6% higher. These are all the names that pulled up in trade towards the end of the session, 25,524. In case we believe the news reports, and finally if we do get a mini India trade deal, and that is in favor for the markets or Indian economy at large, tomorrow is when you could see a sharp uptick as well. But we'll wait to find out how the deal really comes in and whether it comes in favor of India. We'll keep an eye out on what happens. So stay tuned on to Business Today Television. Keep checking in. We will be telling you whether a deal is done soon enough as tonight. And of course, tomorrow is when we will have the US markets hand over Asian markets, and we'll be back with understanding of or decoding of the details of the deal as well with top economists in tomorrow's show. So stay tuned. There's a lot more for you to really catch up from the world of business and finance.
Hello and welcome to Business Today. I'm Siddharth Zarabi and you're